Welcome everybody, and today we'll discuss about transfer, which is defined under section 2 clause 47. Okay, we understood in the past lectures that capital gains is a chapter, and under this chapter if any income has to be taxed, first there must be a capital asset and it must be transferred, yes or no. So we discussed capital asset in the past lectures. But what is transfer? We'll understand today. One special thing I have to share with you, that this definition of transfer is specifically in relation to capital gains only. So now don't take this meaning and apply it any other place. Like I am going to teach you the transfer definition here. Don't apply it under salary chapter or under other sources chapter, nor in accounting or in finance, nor in contract laws or anything anywhere else. So this definition is specifically for capital gains chapter. This should be clear to your mind. Now we are discussing transfer under section 2 clause 47. So first there must be a capital asset, it must be transferred, there must be some profit or gain or loss on such transaction, and such things should happen in the previous year. If this happens, the transaction is taxed under capital gains chapter. We discussed under section 45. So what is transfer? Basically transfer means from one person to another, correct? If some asset is there which one person has, he is giving that asset to another person. This is called as transfer. That's what we know. But here we will understand in technical terms. Transfer includes, basically it is an inclusive definition, indicative definition. It is not an exhaustive definition. Now you may ask me, sir, what is inclusive and what is exhaustive? Hey, when I say inclusive definition, it means some more things can be added to it. Right? We are open to adding more points if required. Whereas when I talk about exhaustive definition, they will simply tell this is the definition and that's it. Nothing to add further. So this is what the difference between inclusive and exhaustive. So inclusive gives you list, and to that list we can add further things. Whereas exhaustive gives you list, to that nothing can be added further. Okay, very good. Now what is transfer? Under section 2 clause 47. So transfer includes, the first word they said is sale. Now what is sale? Very simple, correct? I am selling certain goods for a consideration. Suppose I am giving you something for free. Is it sale? The answer is no. If I am selling something for some consideration, then only we can call it as transfer. So sale is for a consideration and that is transfer. Okay. So transfer includes, first one is sale. Sale means transfer of goods for a consideration. Good. Second point. Hey, here it doesn't just mean goods. It can be even immovable property. I may sell my building, right? I may sell plant and machinery. I may sell some copyright. I may sell some license. Anything, whether it is tangible, intangible, movable, immovable, used for business, not used for business. Are you transferring the ownership? And are you getting consideration? If the answer is yes to both the questions, you are transferring the ownership and you are getting consideration, then such transaction is called as sale, and sale is a transfer. Okay. Second word which is there is called as exchange. What do you mean by the word exchange? Basically exchange means like I will give you building and in return you will give me some gold. So what is this? This is exchange. In simple language we are just talking about barter system only, right? So exchange of one asset for another is called as exchange. Now lot of questions come here. Sir, when we sold the building, we got consideration, we only paid the capital gains. Who earned the income paid the capital gains. But now here we are giving building, in return we are getting gold. So building is also capital asset, gold is also capital asset. And this transaction we call it as exchange. Right? Exchange of one asset, that is building, for another, that is gold. So when there is an exchange of two capital assets for each other, that is called as exchange. Barter system is called as exchange. But who will pay capital gains? The answer is both the parties will pay capital gains. Both. Right? Because this person is selling building, so he will be charged to capital gain on sale of building. And that person is selling gold, that person will be charged capital gain for sale of gold. Clear to all of you? Now you may ask me, sir, double capital gain unfair, right? It is not unfair. Listen carefully. Suppose if this person would have sold the building in the market, he would have got money and he would have paid capital gain. If that gold would have been sold in the market, then he would have got money, again capital gain. So now they are exchanging building with gold, so obviously 2 times capital gain will arise, which normally would have occurred. Clear? Very good. Now you will say, sir, money is not involved. How can we decide how much capital gain? Absolutely right question. Money is not involved. But there is something called as fair market value of each asset. Building has its own fair market value. Gold has its own fair market value. Right? Can we determine the fair market value? What is the market rate for such building, such gold? The answer is absolutely yes. And that fair market value will become the sale consideration or full value of consideration. That market value will become the fair market value will become the full value of consideration for the exchange. Okay, sale of building for sale of gold. Clear? Very good. Now exchange is clear to all of you. Exchange means one asset is given for another asset. 2 times capital gain will be levied for building separately, for gold separately, and what is the value? Fair market value of that respective asset will be the sale consideration or full value of consideration. Third word which we should understand is relinquishment of an asset. Now what is this relinquishment? Very difficult word, right? Very hard word to digest. Relinquishment. I'll make it easy, no worries. Relinquishment is basically you will actually surrender the asset. In simple language, you are surrendering the asset. You are giving away the rights in the asset. That means you have certain rights in the asset. Now you are giving away to others. This is called as relinquishment. Right? And this is also a transfer. Right? This is also a transfer. Now please remember, when you are giving away the rights in the asset, you are giving away the asset to other, you are surrendering the asset. Here the asset exists. Only your rights come to an end. The asset exists, but only what happens? Your rights come to an end. Right? This is what relinquishment is. Clear? Very good. Now, extinguishment. What is extinguishment? Extinguishment is equal to destruction of the asset. Here the asset comes to an end, putting an end to the asset. That is called as extinguishment. Chalo, I'll tell you with simple stories to make you understand. Suppose you have a building, you took the building insurance, and the building met with fire accident and the building totally was destroyed. Now tell me, when the total building is destroyed, you will get insurance compensation from insurance company. Yes or no? But did you give the asset to the insurance company? Are building is destroyed, right? So you are not giving any asset to insurance company, but still you are getting compensation. This compensation is taxed as full value of consideration. So in extinguishment, what happens? That assets destroyed, right? On that you get certain money that will be taxable. So extinguishment of a right in an asset. Many people get confused between relinquishment and extinguishment. Relinquishment, basically the asset exists, asset remains, asset is still there. But in extinguishment, the asset comes to an end, it is destroyed. This difference you should be able to remember. From capital gains perspective, when you have to calculate, you need not divide that whether it is relinquishment, there is a separate treatment, it is extinguishment, so separate treatment, nothing like that. So from numerical problems perspective, doesn't make a big difference. It doesn't make difference at all. Suppose example, you have shares of a company and you paid share application money, share allotment money, yani part of the money to buy the shares you paid, but balance you are not able to pay. So what will the company do? Cancel your shares. They will send you notice to pay first time, second time, third time. They'll wait for 1 month, 2 months, 3 months, whatever reasonable time, and after that also you don't pay the money, then the company will cancel your shares. This is called as forfeiture of shares, and this is extinguishment. Okay, now tell me, shares are forfeited, that means presently shares are there or not there? They came to an end, right? Your rights are destroyed in that shares, right? You had certain rights, that rights came to an end, right? You had rights in shares, that rights in shares came to an end. This is called as extinguishment. Sometimes company even go for reduction of share capital. Reduction of share capital means they will reduce the capital money, they will reduce the paid up capital. So you all as shareholders paid some money to the company don't want that money, neither they want the shares to be with you. So what the company did? Company repaid all the money or part of the money to you, and that part which they repaid, the shares are cancelled. This is called as reduction of share capital, and we can also consider this as extinguishment of rights in assets. Now, if suppose there is a reduction of share capital, how this is taxed? Correct? Reduction of share capital should be taxed, correct? How it is taxed? The company repaid the money to shareholders, right? So how that money should be taxed? The answer is twofold. One, whatever company repaid will have two elements. One is the face value of the shares, and second one, the profits earned on that shares, the accumulated profits on that shares. The accumulated profits are taxed as dividend under section 2 subsection 2 clause 22e. Oh, 2 clause 22d is right. Okay, 2 clause 22d. So whatever profit element is there on reduction of share capital which is repaid to shareholders, that is treated as dividend and taxed under 2 clause 22d. Now more discussion when we come to other sources chapter. As of now this much is clear to you, correct? And the face value of shares whatever is there, that repaid, right, that is taxed under the chapter capital gains. Okay, so profit element under other sources chapter as dividend, and face value of share capital under capital gains chapter it would be taxed. So we understood transfer under section 2 clause 47. Transfer includes, what is included? Sale, exchange, relinquishment of a right, relinquishment of asset, extinguishment of a right in an asset. Over. Shall we come to third point? Compulsory acquisition of property under any law. Compulsory acquisition of an asset under any law. What is this actually? Now tell me, when we generally understand the word transfer, what do you understand by it? Basically, transfer means willingly both the parties agree that I want to sell, you want to buy, so let us enter into an agreement, and that's how transfer happens. So this is commonly transfer means. But for the purpose of capital gains chapter, the third point is included, compulsory acquisition. Now here, is the buyer ready to sell? Absolutely no. Buyer don't want to sell, but government compulsorily acquires it. Of course government pays the money, no doubt about it, but government compulsorily acquires it. Now you may not be willing, but government wants it. So there are various land acquisition laws which are there for the state government and for central governments also, for metro rail projects, for infrastructure projects, for roadways, or whatever governmental interests are. For that, government has the power to compulsorily acquire the assets under the law. Now this doesn't fall under the definition of transfer in general sense, but this definition is inclusive. So compulsory acquisition of assets under any law is included in the definition of capital asset. Clear? Very good. Now come to the fourth point. Fourth point is, which we should understand. Hey, compulsory acquisition, there is a separate lecture which we will be discussing later on. In detail, we'll have around 40-50 minutes talk on that, how computations are done, how the taxation is, what are the different elements will come. Okay, no need to worry. But presently you just understood that government compulsorily takes your property as per the laws which are made, right, land acquisition laws, and that is generally not a transfer but is included in the definition of transfer under section 2 clause 47. So we'll consider this also as transfer. Now one more unique comedy. For transfer there should be two parties, correct? One is seller, second one is buyer. That means at least two parties should be there, yes or no? Yes. I'll tell you one point where even if it is only one party, we can call it as transfer. Is it? Yes. You see the fourth point. Conversion of a capital asset into stock in trade. Now what happened? I have, suppose I have 20 kg gold in my house. अब कल भाग के मत आना, ठीक है, राइट? 20 kg गोल्ड इन माई हाउस, एग्जाम्पल, हाँ, रियली कुछ नहीं मिलेगा. 20 किलो का कबाड़ा तो मिल ही जाएगा, वो ठीक है, राइट? 20 kg गोल्ड इन माई हाउस, एग्जाम्पल के लिए. नाउ आई वॉन्ट टू सेट अप अ गोल्ड शॉप. So when I want to set up a gold shop, I converted the capital asset which I have in my house into a business asset for the purpose of sale. So here what happened? I converted my capital asset, that is gold for investment purpose, into a stock in trade where I am going to sell the gold, buy the gold and all. So this conversion of capital asset into stock in trade is treated as transfer. Now tell me, where the gold was? With me. Where the gold is? With me. But what changed? Did the person change? No, person is same. I am there. But what changed? The nature of the asset. It was capital assets earlier. Now it is stock in trade, business asset, or we can say stock in trade. Okay, it was a capital asset, now it is stock in trade. Because of this change in the nature, it will be taxed. Now, is it fair? The answer is yes. Taxing is fair. Why it is fair? We'll discuss when another lecture on this will come. Here also we'll have a problem and it will take around 1 hour to discuss theory, problems, everything on this. There I'll discuss logic, practicality, how people try to avoid the taxes by using this. Then government introduced this clause, conversion of capital asset into stock in trade, and tried to catch hold of people who tried to avoid the taxes. Similarly, you will be shocked to hear that there is a section 28 under PGBP chapter. Conversion of stock in trade into capital asset is taxed under PGBP. So you convert capital asset into stock in trade, it is taxed under capital gains. If you convert the stock in trade into capital asset, taxed under section 28 under PGBP chapter. So there is a lot of logic behind, we'll discuss when the lecture comes. Okay, so 4 parts clear. First part, sale, exchange, relinquishment of asset. Second one, extinguishment of a right in the asset. Third point, compulsory acquisition of asset under any law. Fourth point, conversion of capital asset into stock in trade. Fifth point, the maturity or redemption of zero coupon bonds. Now on this also there is a separate discussion, it will take around 20 minutes, we will discuss there. But what is zero coupon bonds? Suppose today I will pay 70 rupees to the company and after 3 years the company will pay me 100 rupees. So did they pay any interest to me? 6%, 8% interest? Nothing like that. There is no coupon rate of interest. That's why they said zero coupon. But the difference between 70 and 100 is there. Na? The issue price is 70. That means they sold at 70 and they paid back 100. That difference is taxable. Correct? But there are many things to understand about zero coupon bonds. When it is taxable under capital gains, when it is taxable under other sources, all that will be understanding when the respective topic comes. For the time being, you simply understand that only on the maturity, on the redemption or on transfer of zero coupon bonds, it is taxable under capital gains. What I said, I will just tell you again. If the zero coupon bonds are maturing, that is redemption, right? Repayment or transfer. I have zero coupon bonds, I transferred it to Harsh Bengani, I sold it to Harsh Bengani. So zero coupon bonds are capital assets. When I am selling capital assets, so it is taxable under capital gain. Suppose the bonds are maturing, actually nobody is selling, right? Maturing. Suppose some loan is taken, he is repaying the loan in simple language, but still it is deemed to be a still it is treated as transfer and taxed under capital gains. So what we discussed? I discussed till now 5th point, maturity, redemption or transfer of zero coupon bonds. Now 6th point we have to understand. There is something called as a transaction in immovable property. Transaction in immovable property, like building is there, land is there. And what happens to complete that transaction? There is a partial performance under section 53A of the Transfer of Property Act. Under which section? 53A of Transfer of Property Act. Which section? 53A of the Transfer of Property Act. Suppose I will tell you, I sold the building to you. I sold the building to you. Suppose example, we have a wonderful student called as Money. So I sold the building to Money. 1 crore worth building is there. So I sold it for 1 crore to Money. He is also very strong financially and is very good. He completed his CMA super fast with all the commitment, dedication. So he paid that 1 crore to me. Now I gave the building to him. I gave the possession of the building to him, and he paid the consideration for it. But there is certain legal process pending, like registration is there, right? Property documents are in my name now, but that has to be transferred in Money's name. So that process has to happen. For that process to happen, it will take some time, or he is planning to do it on some muhurat or something like that. So meanwhile, even though legal document wise, registration wise, I am the owner. So when I am the owner, I was the owner and I am still the owner legal wise, then how can I say it is transfer? They said substance over legal form. Okay, legal formalities wise, Ganesh, maybe you are the owner, but he paid the consideration, boss. So when he paid the consideration, he is the owner, correct? So you transferred the building, you sold the building to Money, and this is called as transfer, right? So some transactions in immovable property under section 53A of the Transfer of Property Act, where there is some partial performance of the contract. Why it is partial performance? अरे consideration तो पूरा दे दिया ना sir. He paid total consideration, agreed yaar, but legal formalities he is yet to complete. That's why they used part performance. Okay, very good. Now come to the last part. Here also there are certain transactions which has the effect of transfer of immovable property. Okay, which has the effect of transfer of immovable property. Now what is this? Suppose example, I don't have house, you don't have house. Suppose we have Deepa Lakshmi who don't have house. Suppose we have Chagan Lal who don't have house, Magan Lal who don't have house. Now all these people came together. Arey, we all don't have house, right? Shall we create a cooperative society? I said yes, wonderful idea. Housing cooperative society created. Now the housing cooperative society is pooling the money from all of us. सबसे पैसा जमा कर रहे, right? Pooling the money from all of us, and all the money pooled together, one building is created. First given to one person, second building created, then given to second person, third building created, given to third person. Like that, everybody is getting the building. But do you know, the building's ownership is in the hands of that housing cooperative society only. Then who these members are, what these people's status is? Like I got the building, what is my status? I will be a member and I will get a certificate from the cooperative society of certificate of possession. I'll get the certificate of possession. Now this certificate of possession implies that I became the owner of the building. I am the deemed owner of the building. Registration wise, housing cooperative society may be the owner. Registration wise, housing cooperative society can be the owner, but because of the certificate of possession, I am the deemed owner. Suppose I sell this certificate of possession to somebody, then this is transfer only, right? Okay, this is transfer. Okay, certificate of possession sold, that means it is a transfer. So this way we should understand all the 7 points. Hey, here I gave the example of housing cooperative society, but in the question they may give you a company, they can give you an AOP, but the storyline remains the same. Okay, that all these people require houses. The houses are constructed in the name of the organization, and ultimately it is given to members. Members have the certificate of possession, and they can sell the possession rights, and they can transfer the assets. So till now we completed the definition of transfer.